David just paid his rent for the 241st time. Same apartment, same landlord, same amount, gone every single month. 241 payments. $0 of it belongs to him. Here is the part nobody explains clearly. That same monthly amount, paid toward a mortgage instead, would have quietly built him 6 figures in equity by now. Same monthly cost, completely different outcome. Hiding there the entire time. There is a hidden psychological trap that makes renters feel behind, even when the full math says something more complicated. And there is one specific shift you can make this month to start closing that gap, no matter how small your income is right now. Welcome to FinFinance. I spend way too much time studying the small money decisions that quietly separate the wealthy from everyone else. If you have ever felt like the system is rigged against you, you are right. And this channel is how you fight back. Subscribe and tap the bell. In a few minutes, you will understand exactly why this feeling of being behind exists, and exactly what to do about it starting today. Let us get into it.
The average rent in America right now sits at $1,698 a month. That is over $20,000 a year. Gone. Every single year, without fail. Read that again. Now compare that to what homeownership quietly builds instead, according to recent Federal Reserve research. The average homeowning household currently holds a net worth of over $1.6 million. The average renting household, around $162,000. That is not a small gap. That is roughly 10 times more wealth for households earning broadly similar incomes. Some housing researchers frame it even more sharply, citing a homeowner-to-renter net worth ratio well above 40-to-1 when comparing typical households directly. The exact multiple varies by source, but every single major study lands on the same underlying story: owning quietly compounds. Renting quietly does not. One more number before we move on. Across the entire country, homeowners are currently sitting on a combined $17.8 trillion in total home equity. $17.8 trillion. That figure has never been higher in recorded history. And a separate 10-year study, tracking 250 different American cities, found that homeownership outperformed renting and investing in every single city studied, even when researchers gave renters full credit for investing every dollar they saved by not owning. Homeownership still came out ahead in nearly 80% of those cities. 80%. Almost every city. Almost every time. The difference is not lifestyle. It is not spending habits. It is not that homeowners are smarter with money or work harder for it. The difference comes down to one single mechanic almost nobody explains clearly to renters in their 20s. Picture 2 neighbors with a small garden each, planted on the same street, on the very same day. One of them waters a garden they actually own. Every single drop they pour in enriches soil that belongs to them. Over years, that small garden becomes something valuable, something they could sell one day, borrow against if needed, or eventually hand down to their own kids. The other neighbor waters a garden too. Every single day, without exception. Same effort, same water, same amount of care. But this garden belongs to somebody else entirely. The flowers still bloom. The grass still grows thick and green. It is simply never theirs to keep. That is exactly what a rent payment is, month after month. You are watering a garden you can never actually keep. Here is why this trap is so easy to fall into without ever noticing it. A mortgage payment and a rent payment can look almost identical sitting side by side on a bank statement. Same rough amount, same due date, same account draining by a similar number every month. But underneath that surface, one payment is quietly buying you something called equity. That is the portion of a home you actually own outright, completely free and clear of any lender. The other payment is buying you nothing but permission to stay one more month, with nothing left over once you leave. Landlords are not villains for this arrangement. They are simply the ones capturing the equity that renters help create every single month, one payment at a time, often without either side thinking about it directly. Here is the part most financial videos completely skip, and it is the most important part of this entire video. You do not feel behind because you are bad with money. You feel behind because your brain genuinely cannot see equity forming. Psychologists call this present bias, the tendency of your brain to value what it can measure right now far more than something it cannot yet see or touch. A rent receipt is real. It is printed. It lands in your inbox every single month. Equity, by contrast, is almost completely invisible. It grows silently in the background, one payment at a time, with nothing tangible to show for it in the moment it happens. So your brain quietly treats the rent payment as normal, safe, and unremarkable. Meanwhile, a genuine six-figure gap opens up behind the scenes, completely undetected by the part of your brain that actually tracks progress. This is not weakness or carelessness. This is biology working exactly as it was designed to, just not currently in your favor. And the emotional trap runs even deeper than the math alone. Many renters quietly believe homeownership is a finish line reserved only for people who are already rich, already stable, already ahead. That single belief alone stops countless people from ever starting the process, even when starting is genuinely closer than it feels from where they are standing right now. Social media makes this worse. Every scroll shows another 25-year-old buying a first home with help nobody mentions on camera, a parent's gift, a windfall, a dual income quietly left out of the caption. Renters compare their real, unfiltered situation to someone else's carefully edited highlight and conclude they are further behind than they actually are. That comparison is not just discouraging, it is inaccurate, and it keeps otherwise capable people from ever opening the one account that would start closing the gap for them personally. Before I show you exactly what that account is, be honest with me in the comments right now. Type a 1 if you are currently renting and feel like you are falling behind. Type a 2 if you already own and wish someone had explained this gap to you earlier. Drop your number below. I want to know who I am talking to. Let us run the real numbers on what staying a long-term renter actually costs over time, because the total is larger than most people expect. At $1,698 a month, 10 straight years of renting adds up to well over $200,000 paid out. $200,000. And at the very end of that decade, you own exactly none of it. Now compare that same decade to homeownership. Recent mortgage industry data shows the average mortgage-holding homeowner currently sits on roughly $299,000 in built-up home equity. Same rough decade. Similar monthly outflow, broadly speaking, once taxes and basic upkeep are factored in. One person ends the decade holding a $299,000 asset they can tap into. The other ends the same decade holding a tall stack of old receipts and nothing else. Picture two friends who graduated the same year, earning nearly identical salaries. One signs a new lease every single year, never missing a payment, always a responsible tenant. The other buys a modest starter home the same year, stretching to afford it at first. 10 years pass. Both of them worked hard. Both of them paid something every single month without fail. From the outside, their lives look remarkably similar. But one of them can now borrow against $299,000 in equity to start a business, cover an emergency, or help a family member. The other has a decade of receipts, a landlord who has raised the rent 5 separate times, and nothing to show a bank when they ask for help. Same effort, same decade, completely different financial reality waiting at the end of it. But here is the part that makes all of this fixable rather than hopeless or permanent. This gap is not fixed in stone, and closing it does not require being wealthy already. It comes down to the specific order in which you build your very first steps toward ownership, a sequence almost nobody explains clearly to renters in their 20s or 30s. Here is the rule. You do not need to buy a home this year to start meaningfully closing this gap. You need to start treating a small piece of every paycheck like a future down payment, starting as early as this week. Tonight, before you sleep, open one separate high-yield savings account. A high-yield savings account is just a savings account that pays a noticeably higher interest rate than a normal checking account, usually opened online through banks like Ally, Marcus, or Discover. Set up a single automatic transfer, even as small as $50, and label the account specifically, Future Home. Not a generic savings account sitting alongside everything else. This one account named specifically for this one exact purpose. Here is why naming it matters. Giving a specific dollar amount, a specific name, and a specific future job changes how your brain treats it. You become far more hesitant to casually spend it, and far more motivated to keep feeding it consistently over time. Once that account is open and funded even a little, there is a second move worth making this month. Look up first-time homebuyer assistance programs in your specific state. Many states offer down payment grants, reduced closing costs, or below-market interest rates specifically for first-time buyers, and most renters never even check whether they qualify. Down payment grants are free money from your state government that reduces how much cash you need upfront to buy a home. Reduced closing costs means the state covers part of the fees you normally pay on the day you sign the purchase papers. This second step costs you nothing but 20 minutes online. It simply makes sure that when your future home account is finally ready, you are not leaving free money on the table. This single account, maintained consistently month after month, is the real first step out of the renter trap we have been describing this entire video. It will not turn you into a homeowner overnight, and nobody is claiming otherwise. But it starts building the exact asset that the entire wealth gap has depended on this whole time. The gap between renting and owning was never really about who works harder or earns more. It was always about who has something quietly growing in the background, and who does not have that yet. Tonight, for the first time, you know exactly which side of that line you are actively choosing to move toward. Hit subscribe and tap the bell. Every video on this channel gives you one more move the system never taught you. The next video is already on screen. We are breaking down the $30,000 milestone, the exact number where everything is out your financial life quietly starts to shift underneath you. I will see you there.